What is going on, you guys? Michael Elefante here, tuning in from the camper van, which my wife and I travel from full time now, living off our real estate investments. We are currently in Aspen, Colorado. And what I want to do today, and this is really exciting for us because this is another record month on Airbnb, VRBO with our short term rentals. We have 4 properties that we operate. Technically, we own and operate 3.5 because we went in 50-50 on the 4th one, the most recent mountain house we did with another investor. So what I'm going to do today, which I refer to as a cash flow report, I'm very transparent. Also, if you guys appreciate the transparency, don't forget to hit the like button below, subscribe and follow along. I appreciate it so much. It goes a long way in promoting this content out to others who may find it beneficial. But within this cash flow report, I'm going to review all these properties in detail down to the penny of how much revenue we generated, how many nights we were booked for the last month, so May of 2021, what the revenue was, what our operating expenses were, what the debt service was, so principal, interest on the loan, and then ultimately what our cash flow was after all expenses were paid. And then I'm going to take it one step further, which is why I get so jacked up about talking about real estate. So beyond the cash flow, which sets us financially free, right? Having enough monthly income coming in from our investments that pay for our lifestyle or our monthly living expenses. Beyond that, what builds us wealth over time? So that's equity gain through principal pay down on all the loans, which our stake in each property grows every single month as we pay the loan off. Actually, the guests are technically paying the loans off for us. And estimated or unrealized gain and appreciation, I account for it. I know it's unrealized until we actually refinance or sell the house, but I like to account for it just to holistically understand our investments and where we sit currently financially. So I'm going to add all of that up and we're going to get the total net gain or estimated gain in wealth or net benefit from owning and operating these short-term rentals. So stay tuned, guys. These numbers are crazy, and honestly, they're going to be even crazier in June and July and months to come. So I'm so excited to share all these numbers with you. Property number 1 is a 4-bedroom house in Nashville, Tennessee. It's about 10 minutes to downtown where all the music and the bars are. It sleeps up to 12 people. The reason that people book this place, most of them are celebrating a special occasion such as a bachelorette party or a birthday party or a family vacation. Most of them are booking it because we have a custom mural in our living room which creates a moment. We strive to create experiences in our Airbnbs, and I cannot stress that enough. If you guys create experiences, you're going to get more bookings and be booking at a higher rate than your competition. So this has enabled us to start to cash flow crazy numbers. So anyways, with this place, we had 17 nights booked in the month of May. Our revenue totaled $12,083.58. And our operating expenses, so this includes taxes, insurance, utility bills, Wi-Fi, cleaning costs, all sorts of expenses that take to operate the property on a month-to-month basis. This totaled $2,404.68. And our debt service, so this is principal and interest portion and PMI if we have it on some of these properties, which is private mortgage insurance. That is the portion of the mortgage that is the debt service. So we have $1,914.13 for debt service for this property. And to get the cash flow, we take our revenue, subtract the OPEX, and subtract our debt service, which leaves us with a net positive cash flow of $7,764.77. Now I am so jacked up because this is the best this property has performed ever. It was a little shaky in the first few months after COVID came to the United States, especially being in a bigger city where travel basically came to a halt. We were still net positive every single month except to 1 month. I think it was April. We lost like $200 in cash flow, which honestly was not bad considering travel was probably the worst it's ever been in modern history. So cash flowing $7,764 and change was awesome. So let's move on to the second property, which is also in Nashville, Tennessee. This is located downtown. You can walk to Broadway Street where all the music and bars are. Now this place is a little smaller. So it is a 2-bedroom place that we can sleep up to 8. So we have some pull-out couches and pull-out beds, things like that. Now, similarly to the first property, we had 17 nights booked in the month of May. Revenue was $7,246.34. Our operating expenses totaled $1,519.77. And the debt service on this loan was $1,667.20. So this leaves us with a cash flow of $4,059.37. So we were super stoked about that. We topped 4,000 last month for this property as well. So we're excited to see steady cash flow, and we expect to see that in months to come now that Nashville is pretty much completely reopened as far as capacity limits at bars and sporting events and things like that. So moving on to our third property, which is probably one of, if not our best investment. This is one that we can use whenever we want as well. So it is located in Gatlinburg, Tennessee. It is a mountain house, and it sleeps up to 16 people, which is cool. It's a very big property. I think it's around 3,000 square feet, has a hot tub, big outdoor space, and this place differs, along with our other mountain house, differs from all the traditional cabins in this area because we put a modern twist on it. So we create these little Instagrammable moments, which helps us get bookings, again, at a higher occupancy rate and at a higher average daily rate. So funny enough, this place was booked for 17 nights in the month of May, and our revenue was $12,319.35. Our operating expenses was $3,715.92, and our debt service was $2,053.72, which left us a cash flow for this property of $6,549.71. And that's pretty good. That's around the average cash flow we expect from this property. But you guys are going to see in months to come, as we move into the summer, vacation months for families, and into the fall and into the holidays, we're going to have numbers that are going to like double or even triple this in some months. So it's going to be really fun to watch this come to fruition over the next several months. Now, the last property, we split this property 50-50 on the investment side. This is a really cool mountain house, a more involved rehab. So the investing partner we went in on was another couple, and he's a home builder and house flipper in Nashville, Tennessee. So we became friends after he built the houses across the street from us. And let's say, hey, let's go on a deal together where we'll manage the furniture and the setup, and we'll manage the day-to-day as far as communicating with guests and things like that, but you can manage the rehab. So we split the cost 50-50 on the investment side, and we're splitting the cash flow 50-50. So here are the total numbers in the month of May. Now, this is the first full month that this place was online. We went live in mid-April 2021. And just to give you guys a little peek at how this property is going to do in the next few months, in July, I think we're going to cash flow over $24,000, $25,000. It's going to be insane. So stay tuned for those numbers. But in May, we had 23 nights booked, and the revenue was $14,885.76, and the operating expenses totaled $3,610.58, and the debt service on the loan was $2,024.96, which leaves us with a cash flow of $9,250.22. Now, I did forget to mention that this place is a 4-bedroom place, but it's massive. It has a huge rooftop patio and an awesome game room, a theater room, all sorts of fun stuff. So anyways, we have to take our half, right? Because we're splitting the cash flow 50-50. So our disbursement was $9,250.22 divided by 2, which leaves us with $4,625.11. So what we're going to do is add up all of these cash flows here, which left us with a monthly cash flow after all expenses and mortgages paid was $22,998.96. So literally $1.04 shy of $23,000. So I'm breaking my table here in my van. Just shy of $23,000 in cash flow from 3.5 properties on short-term rentals. You will not see these returns anywhere else in real estate, in my opinion. Maybe if you're house flipping, but then you're going to have to pay capital gains every time you sell, and it's not consistent. That's a job. So by creating these systems where we can create these mostly passive income streams, and I'm traveling full-time from a van, like this is mind-blowing looking back that we started less than 2 years ago, about 1.5 years ago in short-term rentals. So if it can happen for us, it can happen for all of you guys watching. I promise that. Now, let's take this one step further, which again, I mentioned earlier, this is why I'm so jacked up about real estate. I'm going to take not just the cash flow, but we're going to add in the principal pay down on the loan. Now that goes up every single month. If you guys are not familiar, go online and look up how an amortization schedule works and how a loan or a mortgage is amortized over typically a 15 or 30-year period. Most of you guys are familiar with a 30-year fixed rate loan. Each month you pay a portion toward interest and then a portion toward principal. Now each month throughout that entire 30-year period, you're paying a little more in principal and a little less in interest every single month. So literally, the guests are paying the house off for you, but you get to keep that principal portion in the form of equity in that house. And that goes up every single month. And then when the house is paid off, you're just cash cows, right? Because everything that you were paying toward that loan is now going in your pocket. So let's review the gain from principal pay down on all 4 of these houses. The first house in Nashville, the 4-bedroom house, was $658.53 for the month of May. And then the smaller house in Nashville was $501.62. The mountain house, the first one I mentioned, the principal pay down was $880.33. And then the gain from principal pay down on the one that we went in with our investing partner was $615.21. So our half of that was $307.61. So beyond cash flow, if we add these numbers up, the gain in equity that we gained in these properties just from paying off the loan, or guests are paying it off for us, was $2,348.09. Now, the estimated gain from appreciation, I'm going to take a quick side note. I usually ballpark 3% of what I think the house could currently sell for, what it would currently appraise for. So 3% of that number divided by 12, that's how I come up with these numbers, the estimated gain from appreciation on a month-to-month basis. Just for, again, looking at it more of like holistically at the investment, we still have to account for it because over the long term, prices in real estate tend to increase, right? Obviously more drastic over the past few years, but here are the estimated numbers from appreciation from these 4 properties. Property number 1, $1,437.50. Property number 2, $1,150. Property number 3, $2,250. And property number 4 was $2,500, but we got to take our half of that, which is $1,250. So our unrealized gain in equity from appreciation was $6,087.50. So what we need to do is add up the total cash flow, the total gain in equity from principal paydown, and the unrealized gain from appreciation. So add these 3 numbers up, and that gets our total net gain or unrealized gain in wealth from our 3.5 short-term rental properties for the month of May alone, which adds up to $31,434.55. Now, I tell you guys these numbers in complete transparency, down to the penny, in hopes that I can just show you the possibilities that investing in real estate, specifically short-term rentals, can present to not just me, but to anybody out there who has interest in putting their money to work for them. It has certainly changed our lives. We became financially free in 12 months. We retired, early retirement, whatever, quit our corporate jobs 1.5 years after our first ever investment. Some people have done it quicker than us. Some people it takes a little longer. Your timeline is your timeline. But we're traveling full-time in a camper van. We can now do what we want with our time. That is true financial freedom, true financial independence. So if you guys do appreciate the level of transparency that I provide, if you want to follow along for more tips, please don't forget to subscribe below. Certainly like this video. It really helps it get pushed out to other people who will find value from it. If you have questions on these numbers or anything else short-term rental investment related, drop your comments below. I love hearing from you guys, and hopefully I'll see y'all again sometime soon. See ya.